Welcome back. The market is looking pretty good at the moment. So as we were telling you, it's a big move that we're seeing on the headline index. Sensex is now up almost 500 points. The advance decline ratio is also very, very positive, 8:1 in favor of the advances. But we saw a slew of major announcements at Reliance Industries' 45th AGM. Chairman Mukesh Ambani says that Jio will roll out 5G services in metros by Diwali, and the full rollout is set to be completed in 18 months. More importantly, Isha Ambani announced Reliance Retail's FMCG foray, while the chairman also set a goal of doubling Reliance's value by 2027. Harshvardhan Dole, the Vice President Institutional Equities at IIFL, Prashant Singhal, the National Telecom Leader at Ernst & Young, and Harish Bijur, brand guru and founder of Harish Bijur Consults, joins us now on the show. Gentlemen, pleasure having you on the channel. Harsh, let me start with you. Your key takeaways from the AGM yesterday, and more importantly, what's your view on the stock now? Most brokerages have a target price which is well above the current market price. But do you think that there are enough triggers in the AGM that could take the stock to the next level?
I'll take the second one first because that's the easiest one. Well, frankly, the street was hoping for more constructive comments in terms of how the demerger will happen and possible timelines for listing of the two entities. And to that extent, it did not come through. So in short term, there is some sort of a disappointment, and that is what we've highlighted our note. But having said that, from a medium to long-term perspective, I think there are enough triggers for the stock to do well and fetch at least 15% return on a compounded basis. And the reason why I say this is as follows. Firstly, after a long time, Reliance has stepped up the investment in the core O2C business. After the 75,000 crores of capex, we can actually see approximately 20 to 25% volume growth in the business which RIL is actually the best at, which is the O2C business, and which was missing for a long time. So that is one of the strongest triggers. Second, a strong growth outlook was reiterated on each of the consumer-facing businesses. And we saw some of the announcements such as launch of WhatsApp, enabled retailing, etc., which will go a long way in terms of ensuring and capturing the wallet share. And third, most importantly, the green energy initiatives was sort of reinforced. These three ensure that from an SOTP perspective, there is enough arsenal in the stock, which will ensure that at least 15% compounding will continue from here on. So in near term, maybe there is a bit of a disappointment, but from a medium to long term perspective, this continues to be a favored stock in the sector.
Okay, Harshvardhan, good morning. So this near-term disappointment can be slightly bigger, right? Because the market was expecting some kind of definite timeline in terms of demerger. But you think that's okay? The market will take it in stride.
I think it is there in the stock price, isn't it? Relative to the broader market, the stock has not done that phenomenally well. And to that extent, more or less, it is there in the price. But what is more important is, despite the uncertain macro, Reliance is steering ahead with focus to grow its core business. I mean, for example, petrochemical consumption in India has a strong linkage to the underlying GDP growth. And if Reliance is betting big on the India growth story, I think the most logical thing was to invest in the core business, which is what it has actually done. So to that extent, as you rightly said, there is some near-term disappointment. In medium to long term, there are enough triggers for the stock to do well.
Gentlemen, good morning. Prashant, if I can come to you. On the telecom side, what was the highlight briefly? And, these new products which they showcase, right? The air fiber, the PC, the cloud PC, what can it do? Can it really spur growth in a very big way?
Yeah, I think the way the telecom sector is evolving, I think with 5G, which is going to come in with all the new products and services which have been talked about, I think the enterprise space is going to look much better. The overall sector revenue should go up. And I think, Reliance or Airtel or all the operators would have a pie in that. Apart from that, I think the other thing which is being done is this entire Open RAN deployments. and having indigenous open RAN products, which again would be important with such a large scale deployment. And if one can replicate that to the other parts of the world, and that could also see a huge revenue upside for some of the players. So I think we are in for some big revenue growth, at least on the enterprise side with 5G. On the consumer side, we will see some growth in terms of the consumption of data with all the 5G launches which have been talked about in the industry over the next 2 to 24 months. It would result into substantial data usage going up, and that data usage would convert into some form or the other, ARPU growth, which should therefore improve the sector revenues as well as the individual company revenues.
Okay, Harish Bijur is also with us. He's been waiting by patiently. Harish, the succession plan is now firmly in place, right, with the elevation of Isha and Anant. And a clear discussion on a succession roadmap is a big positive and critical for any corporate's, brand value going forward, and especially for Reliance's lack of shareholders. It's a step in the right direction, you believe? And do you think that this would sort of strengthen the brand value a bit more for Reliance Industries?
I think so. And hats off to Mr. Mukesh Ambani for that, I guess, in terms of putting these three silos separate and having one of his children each looking after. Beautifully, at the macro level, I would say that, when you look at India and Indian businesses, you would typically now define three corporate businesses which will take corporate India brand overseas. One has always been Tata. The Tata Trust has prevailed. And the second is Ambani, and the third is Adani, not necessarily in that order. So if you look at these three names, these three businesses are going to define the future of brand India overseas. And valuation, most certainly. If you look at it, the global branding practices are going to be led by these three. Quite exciting times ahead.
Okay. My question, I want to take that question forward with Harsh as well. Harsh, does this give you more confidence in the progression of the company? Generally, we always talk about how when there is no succession plan in place, that leads to a bit of a disappointment. Now there's a clear and crystal succession plan in place, which of course safeguards the continuity of the business as well. Would this be a big plus point from a stock market, stock angle?
Well, certainly yes. See, in the era of ESG investments being talked a lot, I think succession planning is looked upon by long-term investors quite, seriously. And to that extent, what was announced yesterday should bode well from at least governance perspective. I think the next logical step will be essentially giving a greater role to each of these individuals who have been groomed or been identified to lead the respective verticals, and perhaps separation of post of chairman and the managing director or the CEO. That will be very, very assuring from governance perspective, and any long-term investor will actually look forward to this particular logical move.
Harshvardhan, since you spoke about the underperformance of the stock, and it's quite clearly visible, but some part of that is also because of what happened with the windfall tax, right? And on that export duty. Now, of course, it keeps changing every fortnight, but the fact is that the kind of models that the market might be building on in terms of the GRMs, that's perhaps out of the window. But do you think that that impact is now fully priced in, or could it hurt from here as well?
I think that impact is more or less there in the price. And that was certainly one of the reasons why the stock did not perform in sync with the broader markets. That the O2C cycle turned favorably after a long time, and for the government intervention, there will be disconnect between the underlying benchmark deltas versus what the individual companies will report, and to an extent that has also weighed high. I mean, for example, if first quarter Singapore GRMs were of any reflection, perhaps RIL could have earned entire full year profits in first half itself. But now all those equations will be revisited for this particular windfall tax. And that is, of course, one of the key reasons why the stock has underperformed.
Harish, on the announcement of launch of the FMCG business, I mean, any thoughts? I think they've got some 22 odd brands, right? Their own in their own stores, general trade, etc. as well. What is the size of the opportunity? How big can they get with their distribution? And what does it mean for the industry? I mean, are there biggies there?
You know, if you look at the retail size of Reliance to be about 2 lakh crore, and I'm saying, you know, the ability of Reliance to be in everything that possibly other organizations are in. Tata is defined as a salt to steel conglomerate, and I would really define Reliance to be a kind of a Maida to the madness of the metaverse conglomerate. So deepening and widening of portfolio, the opportunities are huge. You can be in low-end FMCG, middle end, and the top end. And guess what? You have the bandwidth for it. You have the platform for it as well. I think we need to wait for geo platforms. We need to wait for exactly WhatsApp commerce, the way it's going to be rolled out widely. And I think the competence is from being a shop at one end to be shopping at another end. These are two different things. The shop is passive, and that's what bulk of Indian FMCG companies have done thus far, focusing on the passive shop. Focusing on the active shopping format of the Indian is what possibly is the biggest opportunity that Reliance has ahead of it with its bandwidth of coverage of N numbers of terrains.
Reliance does have a very aggressive growth plan even in the retail business, right? They aim to be one of the top 10 retailers in the world. And in the last AGM, Mukesh Ambani had said that he wants to grow the retail business, triple it in the next 3 to 5 years. So I think the question that begs asking is this launch of the FMCG business this year, Harish, and coming to you on this, will it help them in any way to sort of reach that target? What else do they need to do? Because this is a very competitive space.
Oh, it is very competitive. And in fact, very frankly, Reliance doesn't have the competence of front-ended brand positioning. That is the only thing lacking. Reliance has typically, even through its FMCG foray thus far, been very B2B or very, you know, through its supermarket dealers' own brands, private labels, etc. A private label going public is a big, big move. Private label competence is back-end. Public label competence is front-end. Companies such as Colgate, you know, whether it be Reckitt, etc., have honed this competence over decades. So very simply put, you know, I would say Reliance needs to cobble together its ability to front-end brand positioning. You know, that's very, very important. And I think that will take a decade or so to put together. But again, as it focuses on shopping as opposed to the shop, I think that competence will also be built.
All right, gentlemen, it's a pleasure. Thank you very much, all of you, for being with us here on this program. It's a pleasure. Harshvardhan, Prashant, Harish, thank you very much, gentlemen. Well, in a first of its sorts, Chairman of the Central Board of Direct Taxes, CBDT, Nitin Gupta, speaks with CNBC-TV18, Stimsy Jaipuria, and shared the future plans as far as taxation policy in the country goes, whether taxpayer burden can be reduced or not. Is a conversation you don't want to miss. Listen in to some sound bites there.
Right now, against the budget target of 14.20 lakh crore, we have achieved collection of more than 4,75,000 crore, which is at the growth of around 33%. The gross collections are still better, with a growth of around 38 to 39%. In spite of more refund outgo, which we want that should be enhanced, the collections are very robust at the and going at the rate of around 33%. Corporate tax as well as personal income tax, on both the side, the collections are robust, and I think the actual picture would emerge once we get the second installment of advance tax in the month of September. So a better analysis can be made around 20th of September once we get the figures for the second installment.
Okay, that's the CBDT chairman, but let's move on now and talk about the consumption space. The festive season is right around the corner. Tomorrow we have Ganpati that begins, and then of course a slew of festivals, and people are of course going to go out there and spend. So how is demand for consumer durables shaping up, and has the consumer sentiment picked up? Nilesh Gupta, Director of Vijay Sales, and Kamal Nandi, Business Head and EVP at Godrej Appliances, joins us now. Gentlemen, morning to both of you. Nilesh, the demand has really, surged through the roof. I mean, people have not spent money, I think, in the last 2 years. So that whole pent-up demand is flowing through right now. But you tell us, how is the situation on the ground? Where are you seeing the maximum demand come through from?
Good morning, everybody. I think this year is going to be one of the very good years for consumer durable industries overall, because what we saw on 15th August also, it was one of the best weekend, I would say, which we have seen in the last 4-5 years. And I think primarily the reason is basically because COVID is behind us. Economy is looking up. There's a lot of buzz in a lot of areas, industry specific, where I think salaries are going high, hitting the roof. So overall, it's a positive sentiment. And this year, I think the demand is going to be there across all the segments. So for the first time, we may not see that demand in specific segments. So be it appliances, large appliances, small appliances, be it telecom, communication has always been in demand, mobiles and laptops, and even your television screens. And the best part, what we are seeing this year is a lot of ASPs are going up at the average selling price. So people are buying premium products, people are buying bigger products. That's also one of the offshoot of post-pandemic, where when people were locked up in the house for longer duration, they realized now they would not want to compromise on the consumer durable products in their homes. So overall, things are looking very good for the season coming ahead.
Okay, well, I think we all a bit, shocked when you said salaries are going through the roof. For at least one section of...
What are you planning to do with that?
For some specific industries.
Sorry, what did you say? For some specific industries, which ones are they?
Especially software.
Okay.
No, I mean, but that is, I mean, for some segments, maybe. Nilesh, just to sort of press on that point, phones as a segment, right? So we had data from a couple of companies. Actually, we had industry data also recently, which showed that I think in the month of July, there were steep falls. The quarter itself, there were very steep falls, quarter on quarter, year on year as well, in smartphone sales. What does that indicate, Nilesh?
So basically what has happened in smartphones, now smartphones currently basically depends upon how many launches happens every month. The more the number of launches, the greater the sale happens. So in July, if you see, the launches were not so many. But now in this coming month of Diwali, we'll see all the brands launching their models, and that should give the boost to the sale. Plus, secondly, people are also wondering about the 5G thing, is there, when it's coming, when it's not coming. So they're on the fringe, but I don't think so that's that much of matter. It all depends upon the number of launches every month.
Mr. Nandi, could you give us a sense how are things looking? I mean, this is a very income elastic kind of space, right? And they're also high ticket. The ticket values are large, anything between 15,000 to 60,000 rupees. Is demand robust, and which are segments where they're robust and where are they soft?
So good morning, everyone. So I think if you segregate the market into mass and premium, you see a very different trend in the last 3 months, I would say, post 15th of May or second half of May. So clearly, because of the inflationary trend, we are seeing the mass segment demand going down. It is actually degrowing over last year significantly. And the degrowth is to the extent of anywhere between 18 to 20%. Whereas if you look at the premium segment, which is inelastic to this inflationary trend, there we are clearly seeing growth and across markets and across categories. And the growth is as high as 30% plus. So a clear demarcation between the two segments. And also, if you look at the consumer sentiments, I think there is a data which was published by CMIE somewhere around mid of May, which also tells with different trends or similar trends, I would say, that in the mass segment, the consumer sentiments are weak, and whereas in the premium segment, the consumer sentiments are better. So we can clearly expect that going forward, this trend to continue.
This is not category agnostic, right? This is across categories. I mean,
categories.
In ACs, lower end are suffering, higher end premium segment is doing well. Everything, refrigerators, everything across the board.
AC as a category is largely for premium. The mass segment consumption is anyway low. But if you look at refrigerators, if you look at washing machines, I think a similar story is there in both these segments, both these categories.
So both Nilesh and Kamal are talking about how premium products are seeing higher demand. Nilesh, I want to understand what's happening in tier 2 and tier 3 cities, because there is this whole rural-urban divide, right? The mass market has still not bounced back in a big way. Inflation is hitting pockets very hard, while the premium end of the market is seeing, it's a whole different ball game. I mean, demand has hit the roof there. Tell us, in tier 2 and tier 3 cities, consumer sentiment as good?
So basically, Vijay Sales is not present in tier 3 cities, but whatever I've got from feedback from the brands and all, they are doing reasonably good. And one good thing which is happening now is all the finance companies, the paper finance companies, are lowering the bar for the entry into consumer durable finance for the consumers. So I think that should possibly give us a flip to the mass segment, where we are seeing a little bit worry in that segment. So I think once the finance companies lower the bar, and they already started doing it, Bajaj Finserv has already started doing it, IDFC is doing it. So I think this thing should boost over there. But overall, the premium segment is definitely doing much better.
Mr. Nandi said 18 to 20%. I mean, that is not small, right, Nilesh?
Yes. That's the growth over last year. Yeah.
So that basically
18 to 20% degrowth, not growth. Yeah, go on.
So that basically, I think, could be a phenomenon for rural where we are not present. In the cities where
the metro and Taiwan.
Sure.
And what you see, what Nilesh has been reporting is right, that city markets definitely is showing growth because the premium segment is driving the growth. Whereas the rural market is showing growth because the mass segment is degrowing. I think that's a very clear trend that is emerging.
All right.
Now, having said that, I think what Nilesh said is right, that we did see spikes in the mass segment also during the Independence Week. And it is expected, even Onam is expected to show some huge spike of demand.
Maybe with the festive season coming on, things will improve.
Correct. Onam is also an indicator, and between 1st and 8th, we are expecting a spike in demand in Onam also.
Got it.
So similar can be expected in Dussehra and Diwali.
All right. We unfortunately have to wrap this up here, but would love to have both of you back with more insights and detailed discussion. Mr. Nandi, Nilesh, thanks very much for joining in on the program. Thank you very much. Really helpful to get that sense. 170, the market is soaring away, and we're at pretty much the day's highest point. We'll take a quick break.
Welcome back. Well, the market's strong, without a doubt today, and just it's not only holding but adding on to gains. And look at the advanced decline. Since morning, it's been strong, and even now it's 7:1. That's very strong advanced decline. Of course, today's been led by financial names, so Bajaj Finance and Bajaj Finserv really standing out. But other economy-facing stocks also doing well, like DLF and Trent as well. Mitesh Thakkar is back with us for fresh calls. Mitesh, it's clearly much better than what the SGX Nifty prepared us for. The gap up and the follow on. Your thoughts and your stock calls now.
Yes, Anuj, much better than I think what we were factoring in at the start of the day. So that's a welcome thing. But I think the medium-term trend remains on the upside. So I think you will be slightly, you'll have more chances of getting positively surprised than on the negative side. Having said that, I'm trading with some long bias. Have stock ideas on the long side. Recommended buy on ONGC here. ONGC has gapped up today and sustaining that. So it's a buy with the stock below levels of 136.5 and a target of around 145 or to about 150 can be looked on the upside. And page industry is something which is breaking into fresh highs out of a good consolidation here. So page is a buy as well. Keep a stop below levels of 50,280. A target of around 52,000 on the upside can be looked at.
Okay, over 50,000 now on Page Industries. Very strong move, fresh highs there on that stock. Thanks, Mitesh, for joining in. Let's slip into a quick break. On the other side, a special segment, It's the Economy. Lata will connect with Lakshman Achyutan, the co-founder in Economic Cycle Research Institute, to discuss concerns over rate hikes, recession and earnings growth.
Well, the financial world was in a tizzy after Jerome Powell said at Jackson Hole that he intends to go after inflation. Even if there is a longish slowdown, he intends to hike. Risk assets fell on fears of recession, but is a recession round the corner? Will it be a longish slowdown? Should we therefore not buy the dips? To answer some of these questions, we have with us someone who excels in forecasting business cycles. Lakshman Achyutan, the co-founder at Economic Cycle Research Institute. Well, much regarded for his ability to be able to guess the turn of the business cycle. Lakshman, thank you very much for staying up for us. Okay, well, let me start. The markets did fall, especially immediately after on Monday, fearing a recession. But if you looked at the US, the GDP has been falling for the past 2 quarters. Yet, as the Nobel Prize economist Richard Thaler on CNBC said recently, this doesn't feel like any recession because job growth, consumption, everything is so good. What's your take? Are we on the road to a long slowdown?
Well, I think both things can be true. It could not feel like a recession right now, and I think that's accurate in the sense that coincident indicators, things that tell us about the economy right outside our window, they're not completely recessionary, and labor markets are a good example of that. On the other hand, our job is very much to assess the cycle risk, what's likely to happen in coming months and quarters. And to do that, we look not at coincident data, but at leading indicators. And at leading indicators of the economy, they are, there's no other way to say it. They are downright recessionary. It would be irresponsible to not say that they're recessionary. So that's where we are. It's not the end of the world. We think we understand the circumstances of this recession. And it is a good idea, therefore, until the end of recession comes into sight in the forward data, to be a little more cautious, be a little bit more risk off.
Yeah, but there is data to the contrary, as you also agree. Powell said labor markets are exceptionally strong. Is it possible that despite the rate hikes, consumer demand remains strong because of the strong job growth and the economy bounces back rather than keeps on going down?
Never say never, right? I've learned that in my decades of watching cycles, but I think it's highly unlikely that will happen. I think the path to a soft landing has been becoming extremely narrow since the beginning of the year. Again, now, to put what is happening in cyclical context, we have been slowing. A cyclical slowdown has been going on since spring of 2021. Okay, that's a long time ago. That continues. And the question is, can we get a soft landing where we avoid a recession? Now, sure, we hope for those. We always hope for those. But the Fed and other central banks were so slow in fighting inflation that now they are having to prove how strong they are. And Mr. Powell said that last week. And we're going to fight inflation. And if we have to choose between a recession or inflation, we're going to choose a recession in order to combat inflation. And so that is the course the Fed and other central banks are locked on right now. They are tightening into a sharp slowdown. And it's not unusual for labor markets to hang in there right until the recession starts, or even a couple months into the recession. And because of some of the strangeness of the COVID recession of 2020, there's still that might have something to do with why labor hasn't fully started to contract just yet.
So what you are seeing is earnings growth will keep slowing from here on.
Yes. So I think if I was to try and understand what the market's doing, right, and that's hard to do sometimes, but we see a 24% decline in equities this year. That's typically called a bear market. And when you look into why did that happen, I think people largely ascribe it to the Fed starting to hike rates. And so we had an interest rate adjustment on the valuations of the markets, and that's what that was. But there wasn't much adjustment on earnings expectations. And that is, a recession is about destroying demand. Growth. And so it's very hard to imagine how earnings are unaffected by a recession. And you're starting to see that. I know that we've seen good top line stories about earnings through Q2. But remember, that's backward looking. And we're looking forward. And when we look forward, there seems to be a little bit more trepidation, even among the managers of the large companies.
So in that case, you're saying we should not be buying the dips because the market will logically fall more as it realizes that earnings are falling.
Yes, and I want to talk about one more point, which not everybody is aware of. We look at cycles globally, right?
Yes.
So we're looking at over almost a couple dozen major market economies, including the United States and Europe, Japan, even China, in India, and the major emerging markets. And the long leading indicators for those economies are in their weakest configuration that we've seen anywhere other than a global recession. Okay. So that's a global cyclical slowdown akin to, there's a risk of a global recession. Within that, that's happening. Okay, that's our analysis that that's happening. At the same time, more central banks than ever in history are raising interest rates. And so that's a very toxic combination. It makes it so that there's no clear locomotive of growth to pull other economies out. And so here we have the Fed being very hawkish. That makes the dollar stronger, that weighs on emerging markets. I think the one silver lining I could possibly see for India is that, unlike other emerging markets, which have a lot of exposure to commodity price inflation, they need commodity price inflation. India, of course, does quite well when oil prices, energy prices are coming down, kind of helps the trade deficit and things like that. So that could be a silver lining here. I'm trying to look for some good news. And also, we will survive the recession. We've in the United States we've made it through 48, so we'll make it through this one too. But I would be prepared for a rainy day.
Okay. Well, since you just referred to India, is India in for a longish slowdown?
Yes, I think cyclically in terms of growth, India is in for a slowdown. It's very hard to completely disengage from the global economy. But with the risk off that we're seeing on emerging markets, you have seen of late, the domestic investor in India is participating a lot more. So I think it's mitigating the downturn to some degree. And in terms of just the structure of the Indian economy, as oil and energy prices continue to edge lower, that I think is supportive of the overall Indian kind of trade with the global economy. I think that's a positive, probably.
Okay, and you also referred to inflation several times. Now, many, including Jerome Powell, believe that inflation has peaked. Yet there are people like, Zoltan Pozsar of Credit Suisse, who are saying we are going to see a decade-long inflation. What's your take on that?
Sure. I think he's making some interesting points. They're structural points. He's talking about deglobalization. In fact, that's been going on for almost a decade now. I mean, it's not new, but I'm glad it's being recognized. Certainly the Cold War with China, not helpful. I think the demographic issues not helpful. So these are all structural things which are going to lift the level of inflation a bit, right? But then on top of that, we have the inflation cycle, the acceleration and deceleration in inflation. And on that score, I think cyclically, it's not structural is 5-10 years, cyclically is a few quarters. So cyclically speaking, I think we have seen the peak in inflation. with probably related to the slowdown. A recession is going to probably make that go down further. The problem is, and this is why Powell had to kind of lay down the law on Friday. The problem is that having a peak at 8 or 9% inflation and then coming down to 7 or 6, that doesn't mean they've accomplished their job, right? They need to get substantially lower. So yes, we have a peak, but the level is uncomfortably high, which means the Fed continues to tighten into a cycle slowdown, which virtually guarantees a recession.
Oh, fair point. Well, the next big question for us, for the markets, is that the US economy, will it manage a soft landing? You touched on it. Will Powell be able to stop at just the right spot to ensure that he doesn't push the economy over into a deep recession?
You know, I hope that somehow that can happen. I do not have any analysis or research that points to that conclusion. To the contrary, the research does not point to a soft landing because the Fed, prior to this inflation cycle upturn in 2018, 2019, changed its policy framework from being preemptive and trying to move ahead of the cycle to being much more reactive and waiting to see the cycle before they changed. And so when I hear him say, we need to make sure that inflation has gotten under control, if you translate that to cycle speak, that means I'm not looking at leading indicators. I'm looking at coincident data. So I need to see the coincident inflation data way down to where I'm comfortable before I ease off. And he has often invoked Volcker, Paul Volcker, the chairman in the late 70s, early 80s. And Volcker famously pivoted after the 1980 recession, which was a short recession. He pivoted and he became easier, and inflation pressures very quickly moved up. And so he had to put on the brakes very hard, and we had a large global recession in 1981-82. Powell does not want to go through that experience. And so he's trying to avoid that. Now, separately, I know Powell has also invoked Greenspan. Greenspan's interesting in the 1990s because in 1994, completely different policy framework. Yes. It was a preemptive policy framework. And before inflation really started going, the Fed raised rates in early 94. And before inflation really receded, but the forward-looking data on inflation had turned down, he eased in 95. And in retrospect, that was a pretty good expansion. The 1990s is looked at as a pretty good expansion on the different marks that you would give for an expansion. And so this preemptive soft moment of policy maybe had something to do with that soft landing in the middle of that decade. And so I know Powell wants to be that, but with his framework, it's difficult to be that.
Okay, just one final quick one. Will the Fed hike even beyond 4%?
Above 4% remains to be seen. I don't know that they will do that. I think if we were to get some extra sticky inflation numbers, they could be pushed to do that. I think if for some reason the market ran up strongly, they could also be induced to do that. So on the inflation side, there's this calculation around rent that goes in, right, to the CPI numbers, and there's some other health numbers and services numbers that are relatively high, and those can be kind of sticky. So there's a risk there. And then in terms of the market, you know, while certainly I see cyclical risk, and I think earnings growth is coming down, and so on and so forth. You know, sometimes the market disconnects from the cycle. It tries to anyway. It might try to do that, as it I think tried to do over the last few months. And Mr. Powell came out and kind of reminded them of what he had said earlier.
Okay. Fair point. Thank you very much, Lakshman Achyutan, for joining us. It's not a very encouraging conversation. Lakshman doesn't see the chances for slowdown. But at the moment, markets are not looking like they're believing that. Markets in a risk-on mode. We wrap up on Bazaar on that note. Chartbusters up next.